Officer, these branches, the officer of grade 1, 2, 3. The officer may work as zone heads. Cash reserve of bank. Need for. Most of the liabilities of banker are demanded obligations. In order to meet the demand liabilities on deposit, he must keep with him sufficient amount of cash reserve. This is considered as first line of defense for bank. If the bank does not keep adequate amount of cash reserve at any time, banker is not able to meet the demand obligations, then the goodwill of the bank will be affected and faith of customers on the bank will be shaken, which may lead the bank to bankruptcy. On the other hand, if more cash reserve is kept than requirement, then the profit of the bank will be affected. So there is an adequate amount of cash reserve to keep the commercial banks. Cash reserve of a bank is in following three forms: cash with central bank, cash in hand in form of coins and currency, balance with other banks. Definitions: the part of total capital or any trading bank, financial corporation, or institution which is essential to deposit with central bank or to keep with it in cash form is called reserve. It is that part of total asset or capital of commercial bank for financial institution which is necessary to keep with central bank or itself in form of cash is called cash reserve. The cash which is possessed by any trading bank in order to meet the immediate demands of its customer in termed as cash reserve. Ratio of cash reserve. Cash reserve means that particular part of total deposit which is essential to keep with the central bank. Central bank is authorized to bring change in the ratio of cash reserve according to the circumstances. The ratio of cash reserve which is commercial bank keeps or inquires for meeting the demand of its customer. It is dictionary power of the bank. Factors of cash reserve. The amount of cash reserve cannot be determined by the rule of thumb, but it depends upon the following factors: legal requirements. If the law requires that bank must maintain a certain percentage of its deposits as cash reserve with the central bank of the country, then the bank must maintain at least that ratio as reserve. If reserve ratio is raised more than cash reserve is required. If it is lowered down, then less cash reserve may be required.